Hi, this is Simon with Trade and Perform Coaching, doing the trade review for April 8th, 2014. Pretty interesting day coming into the day. I want to try to keep this as brief as possible tonight, just kind of hit the highlights, mostly because I'm tired and it's already late. At any rate, okay, so a couple of things that I discussed this morning. The first thing was, in order to have any up, we had to get above Globex high. Right, and then I also stated that the first hour can actually be quite challenging, and if you look, we did reject right out of this area. I was actually hoping that we could get Globex high, but we didn't. We rejected out of the zone for the first time in. That told me right away that the zones were pretty much working on first touch. Next, we rotated down, and yes, we didn't quite get to Monday's low. But I had highlighted prior to the open that this was really the area that I was looking for. Then I pretty much said no matter what, I'd be taking a trade here with a 3-point stop behind this zone. That means that 1830 from 1833, which is where this open gap was, 1830 was my stop. So if you look in the video right below here, I highlighted that, and then I also noticed that this would be a great place to trap late sellers and push us to the other side of the range, and that is exactly and precisely what happened. Also, you'll notice this is second time into the zone, and obviously we had a fairly easy time getting through that. And then we came up to this zone here, first time into the zone, we had rejection down, and you were able to achieve obviously 2 points plus a profit. I did tweet out that I was not going to take a short here, and there was one reason and one reason for it only. I was long still from all the way down here at 1833, and I just felt what we were due for a reversal. We're down huge from the high, and I just thought we could make it up into the 1850s today. We got close. We got 1849, and that's just when I get a good swing, I want to be able to take advantage of all of it if I can with doing less work. So I simply didn't take the trade up in that zone. But I did clarify the reason for not taking that trade was because I was already long, and I'd already had a monster day. I had a big day on NQ and a big day in ES. Also, you'll notice in waiting for this, right, and I clarified that trading from the easiest places to trade are from the edges, and I had expected a balanced day, and this is exactly what we got. And I had explained that balanced days can have quite a wide range. So this is approximately 1831 all the way up to 1848. So that turned out to be a, wow, I can't even do the math on that, 1848, 38, 17-point range. Okay, so you have to keep track of the ranges and how they're changing through a daily basis. It was before, if you go back 6 months ago, a 15-point range was a good extension on a range extension day. Now that's just a balanced day, and the reason for that is because on our non-balanced days we've expanded to 20 to 30-point ranges. So that's one of the nuances you have to pick up as a trader. There's no easy way to explain that other than keeping up with the up and down transactions through the course of the day. In addition to that, I also said I expected balance in the afternoon. This is a picture of balance, guys, right here. And the interesting thing about balance is balance makes you look like you're about to break out, and then you fail and you go to the other side of the range. The other side of the range looks like you're about to break down, and then you go back up to the other end of the range. This crushes inexperienced traders, people who chase. And the other thing that I want to say is, don't short in the hole. This is what happens when you short in the hole to undisciplined traders, is they get their ass kicked, and they should. Okay, ES is a terrible momentum trader, and you have to play chess with ES. Okay, you have to let them come to you. You have to catch them when they are dislocated. Okay, and you have to think through the process. This would have been the third down day. We've barely been able to manufacture 2 days in a row where we're down, so getting 3 would be difficult even in this environment. And the first 2 were so crushing to the downside that you'd have to expect some kind of retrace. And I reiterated again, if you look at that video, don't get too bearish. And I simply wasn't too bearish, and I actually had a beautiful trade. I actually caught almost all of this right here. I left a little bit on the table right there. So that's the summary for the day. I had a plan. I executed the plan exactly as I said I would, and I scaled on the way up, and that's how you make money. In addition, I also tweeted out before we got here, actually I think we were right in here, that this open gap was begging to be tested, right? And just like it is when everyone panics, normally at open gaps we get responsive buys right here. I had said that we simply would probably overrun that a little bit, which is what the reason was for increasing the stop. Also, from a psychological standpoint, when I say I'm willing to lose money in an area, there's got to be places where you're willing to put yourself at risk, right? We're never going to have complete information. We're never going to know everything we need to know until we're all the way up here, right? If you're waiting till up here to find out if we're going to reject down here, you're going to have a very difficult time making money in ES. Additionally, if you don't know the times of reversals for the different securities you're trading and their behavior patterns, you're going to have a difficult time making money day trading on a regular basis, right? And then the last piece is you should have as much of this. Every trader that I deal with has to have their trade plan written down, okay? And they have to be able to follow it on a day-by-day basis, whatever that is. That you should not be thinking while the market's open. You should pretty much have your trade plan down before the market ever opens and know what you're going to do at various areas. If the market does this, then that. I guess that goes back to old computer programming, right? If this, then that type of scenarios. And know what your scenario is for the upside and what your scenario is for the downside. Last thing I want to look at real quick is NQ. Oh, by the way, I did put up these trend lines prior. I haven't looked at them since. Let's see what they look like. So if we look today, I had said that these three areas right here are critical, right? And I said this is the very, and I pointed out prior to the open, this is the very bottom. I said, if you go back and look at the video, this is the very bottom of this trading range, right? And then I pointed out, where's the other end of the trading range? All the way the heck up here, right? This is the other end, all the way up here at 1878. Okay, and then if you'll look, right, we had this, we clearly had a downtrend line. That downtrend line was unable to be broken out of the open. We finally broke it to the upside, which is why I wasn't overly eager to be shorting. I can tell you right now, tomorrow, you should have this trend line, okay, posted on your chart, because we don't got any down unless we get below this in the morning. Okay, it doesn't mean that we will go down if we break it. It just means that we're not going down unless we do. Okay, so there's a distinction. Also, if you'll notice, these areas of support and resistance, obviously it pretty much ignored this one, but it respected this top end of this backside of this channel here. We had a fake break above this channel. So basically we traded from support to the same backside of this channel, and this comes back. If you look to the left on the hourly chart, you can see where the support line came from. So last piece is on NQ. Let me see if I can find that quickly. This is my NQ chart for today, and if you look, we attempted to break out over Globex highs. We failed. We failed two times actually. Traded back to Globex low. Tried to break out again. We failed a second time. This time we trapped underneath Globex lows, right? And if you look, okay, critically, so here at this 930 spot, NQ was still above Monday's low. ES at the same time point. Let's look at this chart right here. At this same time frame, we were already trading below Monday's low. Okay, so obviously I told you NQ was stronger than ES. As I said, ES tried to assert leadership for 2 days or 3 days. It's failed. NQ's clearly taken over leadership to the downside and now to the upside again. That's the way this market's been for months and months. Obviously the rotation from NQ into ES has either stopped and or just taken a break for a couple of days. That kind of remains a wild card there. But you've got to be able to play both of these against each other and, in order to be able to figure out what's going on. And then the last piece that makes trading so hard, especially if you're trading multiple markets like I am, NQ and ES, there is a bit of mental gymnastics going on between the two, and it's not necessarily easy to get. You don't have to watch NQ. At its most basic, the zones work, right? Even without ever looking at NQ. First touch, rejection. First touch of this zone, rejection. This is the first touch of this zone, which I adjusted down in the meeting. Okay, we came in. I said all I said was you need to have a 3-point stop behind. That's all I said, and that I was targeting the back of the zone. Fairly simple. 3 points behind. First touch in, rejection. So if you look, that's 2, 2, 4, 6 points that was achieved on first touch prior to 11 a.m. That's all you need to grow an account, guys. So I don't know what else to say besides that. You don't have to watch NQ. It helps, but you don't have to do it. And for a lot of people, okay, it's important to know, a lot of people are getting too much information is a crusher. Okay, they just can't process it quick enough. You got to know who you are and how much information you can process. You'll notice my charts are fairly raw charts. I don't have any technical indicators in there. I think they're just broken crutches is the best way I've heard them described. Okay, and the flip side of that is additionally they hamper your ability to read price action. Markets are fairly simple markets. It's breakdown, retest, breakout, retest. That's how they work, and occasionally they bust through those zones, but for the most part on all time frames, that's the structure that works in the market. If you can identify your areas of structure, you can make a tremendous amount of money. Anyways, guys, I'm tired. I'm out. It's almost 11 o'clock, and I need to grab some sleep. I will see y'all in the morning. Have a good night.